All right, let's look at the GDX here as well. So the miners, and you can see the miners, by the way, you go back to 2012, right? And the miners were basically trading even higher than they are today. Now, a lot of people would look at this and say, oh, the miners are washed up. There's no sense. You know, many people say that about gold. Gold's washed up. I literally lick my chops. I lick my lips when I see this price action. Because what this is telling me is that when everyone else hates it, they're going to be offsides. They're going to have to play catch up. And you can see massive upside in the miners. So the key here is this. The reason why the miners have underperformed is because inflation's been inching up, right? Every year, even if it was 2% inflation, there's still inflation. Gold has not been keeping up with that. So the miners have done worse and worse. They're paying more for labor. They're paying more for equipment. They're paying more for this and this and this because of inflation, but gold hasn't been keeping up. Therefore, they're losing money. They're not losing money, but they're making less in profit. The thought process is this, guys, is that at some point, we're going to see gold start to rip, and the miners will have an amazing opportunity here. And in terms of trend lines, look at this trend line here. Going back to this level here, right? We go back to 2011, we connect it right through, and we have a major trend line to watch for a pivot point for a breakout, right? So here to here to here and to here and all the way through. And I will say this, is that ultimately we can look for a breakout through this level, which is about $35. Now, I still think, to be honest, there's still an opportunity to buy in this lower level around $28, $29 and make a boatload. But if you really want to be patient, you want to see the miners get through this $35 level, this longer term trend line. And honestly, my guess is that coincides with a major breakout on gold. All right, so again, the idea is if gold can break out, all of a sudden the inflation, which is coming down for the miners, right? It's only at, what, 3%, 3.5% now. You're now looking at gold starting to run much, much higher, getting its next bull leg. Let's say gold's at $2,500, $3,000 an ounce. The miners, if inflation stays at 3%, they're going to be rolling in the cash at that current price.